Hi, everybody. Just wanted to do another episode of Revenue Management Live with you all. Hopefully, you guys got to catch the last couple. I'll give you a little recap of what we've been doing in the last couple weeks here. Um, a couple weeks ago, in my episode, we took a look at the 3 and 4 kind of bedroom group in Charleston. We had some hunches that the summer really wasn't pacing the way we would expect for seasonality, and that also seemed to be the case for last year. So we made some pretty significant changes to those rate plans. And this week, what I really want to do is just kind of check up on that. You know, we made these big changes. We want to see how this is pacing, see how this is interacting. And because some of these changes were pretty substantial, if we're now booking ahead of pace pretty substantially, we potentially can capture much more upside on that. So I'm going to take this session to really go through those groups of listings that we did. I'll also show you a couple other kind of tricks and tips for things that we might look at. If you caught last week's, that one was a little different. Kegan used key data to investigate one of the other market areas in this portfolio, which we're not as familiar with. Very, very interesting. I'm probably just going to focus on Charleston again, but as we move forward, we may start to focus on some of these other market areas, particularly the ones that we know have really big summer lake performance. So just to start us out today, I have the bookings page pulled up, and the owner of the portfolio had asked us some questions that I do want to kind of address here. He had talked to us about how he was just concerned that the last couple days really have started to look like they're falling behind a little bit in sales. And, you know, as the revenue manager, it's my responsibility to just kind of inform him with some data, talk to him about what I think. Some of this is going to be a mix of like what we actually know, and some of it's going to be a mix of just, you know, what I think is going on in the market. So to address this question, the first thing I'm kind of thinking about is, well, that's definitely true. The last 3 days haven't picked up as much. We do know it was a pretty big weekend, kind of event-wise, across multiple parts of the country with the eclipse happening. So whenever there's big events, Easter was the week before, sometimes we want to be careful about like drawing too much because people's buying patterns do change when they're paying attention to a bunch of macro stuff. Hard to like connect that exactly, but that might be something. It's like, hey, you know, it does look down the last 3 days. Let's just wait a little bit and see if that continues. If it continues to be down, then maybe we'll be concerned, but I don't really want to go and make a bunch of changes because something, you know, a 3-day time period is very volatile. We really want to see that happen over a week or 2 weeks, which is a big reason why we start to try and look out further into the summer than we had been in the past. Another thing we might look at here is if I'm just kind of flipping between this, the big differences that I'm seeing here in terms of like where the sales are kind of drying up, it tends to be over here in March and April. So if I go and just look at this and we flip, I can actually put these side by side, I think. So let's do that. So we have kind of drops week over week across all of the time periods. Although keep in mind that this left bar is the 2-week one. This is not quite halfway. So we're actually haven't lost much ground in June. We might be picking up more. This is about halfway, so we're probably about even. Where we're really losing ground is April and May. And part of that is something that I would say is not actually very concerning to me. We know that April is coming up. We've actually got that pretty filled, particularly when we look at Charleston. This is kind of the whole portfolio. But as we get into April, since our booking window has been historically short, we're actually booking less and less. Since we kind of pushed our booking window out, we might have got a pretty big bump the last 2 weeks. So even though the last 3 days are down, they're not really down because we're full here and we're actually still increasing or holding strong in the months that that we've really been trying to drive revenue in. So that's kind of one way to look at it. Another way, and I'm going to restack these. Oh, that's interesting. Okay, so we'll restack these up. I'm just going to look at the occupancy just to kind of support that. And I'm going to bring this to the daily level. So if we look at this, you know, we're not at 100%. So there's obviously some rooms, but many of these upcoming weekends are very, very highly occupied. I mean, the next 3 weeks we're, you know, up into the 90%. We're still up over the 80% through May. And when you think forward that kind of like 6-week window, 8-week window, there's just a lot less to sell, right? What's not going to be selling is the stuff that hasn't been selling traditionally. there's probably a lot of gaps on the calendar, like orphan nights or gaps that we aren't able to easily sell. And that's just going to kind of neuter the overall revenue pickup performance that we have available to us. So if I were talking to this company owner, I would probably tell them that. I'd give them a little assessment, type up, hey, just had a big weekend. We're actually really occupied in the short term, so there's going to be less to sell in the months of June, July, and further. We're driving a little bit more revenue than we would have last year. We can kind of check that. We would have to do some things here. So let's see. If I go to my tags, let's look at the years here. We'll just grab all these years. We'll leave out 2023 for now. And let's bring this back to the monthly so it's easier. We'll grab last year. So if we're just looking at the units that we had last year, even though we're down week over week, we are significantly up in sales year over year, which means our pacing is extremely strong. So sorry, paused it for a second, but I think some of these would be really helpful to kind of show this owner if they were concerned. I mean, at the end of the day, the goal I'm trying to do is just buy a little more time. I'm not super concerned. I want to make sure that they, trust me and can also understand. So some of the reasons that I might give are, this would be a great graph to show them. It's like, hey, we are down a little bit, but keep in mind, we've been driving a lot more revenue, especially in these months we didn't drive before. So this is actually a major success. And even though week over week we're down, we're not really down in the places where it counts, June, and we're not down year over year, which means overall we're pacing really well. So if I were using this platform, I might just grab these, throw them into an email, write a couple of those notes, and tell the person, hey, if you want to call me and chat about it, go ahead and do so. So that's the first question we're going to ask is, that we're going to answer is, hey, company owner was concerned that last 3-day pickup was like less than the last 7 and last 14. We know that we've been driving more revenue. We can show that by showing both year over year and also just talking about how there's going to be some, when we look at revenue, that's kind of across the whole calendar, but where that revenue falls is important. We just have a lot less to sell in the short term. And even then, we're still selling a little bit more in the properties that we had last year. So that's pretty solid. So let's take a look now. Let's go and dive into a very specific group. Let's take a look at that Charleston group we were looking at. So let's see, what group do I want to do here? STR and B&B. And I probably waited a little too long to look at this, honestly, because we're going to look at the last 14, but I can't really see too much before that. And let's add a few things here. So let's start with these bedroom counts. We're going to do 3s and 4s for right now. I'm going to put this on occupancy, and I'm going to bring this down to the daily level. So let's just look at the totals first, just because it's pretty easy. I mean, this goes into kind of what I was saying, where if we go all the way out to May 18th, we really don't have much that we can book at all. So that's a good sign, right? We have a pretty solid booking window. Based on our analysis of when we should be selling these, which is up here, these 3 and 4 bedrooms in Charleston, we're looking at 65 to 80 days, and we're well ahead of this 50%, or we're kind of like right in between, because May is roughly 60 days away. 20% left. I mean, we have less than 20% left on most of these weekends. We're in pretty solid shape. We're probably ahead. If this were an up market, I would probably be concerned that we undersold, because if you've been listening to any of the other panels we've been doing, or just kind of listening to market conditions, the markets seem to be a little bit unstable right now. A lot of people are having down markets. I actually probably want to be ahead of those historical booking windows, just because I want to make sure that stuff is on the books in case prices start to collapse in the short term. So this is actually a good sign for me. If this were an up market, probably undersold a little. I don't want to be pacing this fast, because we're in a down market, where the perception is we're in a down market in a lot of markets. I'm actually looking to kind of beat these booking window perspectives. Now, the area we really want to be looking at is this June area, because when we looked a couple weeks ago, first thing we noticed was the portfolio's performance wasn't matching the market. We were not performing as strongly as we thought we should. When we pulled up a bunch of listings, The historical actuals that we were getting were significantly lower than the rates we were posting. They were also generally coming in the very last minute, which is an indicator that all of those rates were collapsing. We were trying to sell last minute. We weren't even guaranteed they were being sold. So what we did is we significantly adjusted that rate position so it was still higher than what we did last year, because if we booked last minute, we can expect that we probably can book it for more. But also a significant rate cut. I mean, in some cases, we were cutting the rate 20 or 30%. We were still sitting minimum 10, probably up to 20% above where we were last year. And the goal that we're looking for is, can we start to drive occupancy gains across these properties in June going into July? And it looks like that is what we're doing. So if we actually pull off the totals here, we are looking at a situation this year where the weekends in June are as highly sold as our weekends in April and May, that's a pretty big increase on the booking window. In fact, looking at how much we're selling these, we may have cut a little bit too much, but I think overall that's okay, because we're, based on what we were actualizing, we're going to be actualizing a lot more than we did the previous year. This puts us in a really strong position across most of these weekends. I mean, probably should have done this a little bit last week, but starting this week, we're in a position to potentially raise these rates. We also are in a position to potentially raise July as well. And we're even seeing some of this movement in August, which is really, really far out. So this is excellent. This kind of proves the thesis we have, which is that we were just mismanaging the price year, both this year and the previous year in the summer. That summer should be as high of a season as spring. And if we have the price right, we can really drive strong sales. Now, this isn't going to last forever, so we'll probably hear from the owner again that sales are dropping, because we're just packing so much on that eventually there's going to be less to sell. But the goal here is now that we can kind of optimize these. So let's take a look at the next 7. I mean, we're pretty much seeing the same thing. Sales across every week. My guess here is that we're probably going to want to just start upping all of these on the calendar, and that's what we're going to do when I pull this up next. There's one thing that kind of sticks out to me here, and it's this 4th of July. What is the 4th of July this year? So the 4th is on a Thursday. So this should be a really good weekend for us. And the fact that there is nothing on, this is a huge thing. This is what I call bookending. This weekend is the lowest occupancy weekend probably on the calendar until like November. Right? Like every other weekend has something on it except for this one. So it's the lowest occupied weekend since November. The weekends around it on both sides, so 1 week and even 2 weeks out, are both significantly higher in occupancy. There also have sales on all of those weekends, whereas we really don't have any sales here. There's clearly some week-long stay or something that's going across this, so I'm not really going to count that. But when I say bookending, I mean basically we're selling on both sides of a time period, but that one time period isn't selling. Now, bookending is really difficult to deal with if you don't have big price differences. That might just be an indicator that demand is a certain way, or there's some events you don't know. This one's the opposite. Everyone assumes that 4th of July is going to be way higher priced. And the fact that we have a longer booking the week after, we have more booking the week before, means we're probably just totally overpriced for this date range. So that's a big one that we're going to have to keep a note of and talk about, because I don't like to see much bookending. Bookending is a really clear visual shape to look for to give you something obvious to act on. And I've seen this in a lot of other people's portfolios this year. I think a lot of people overestimate their events, and once you start getting into bigger portfolios, you kind of need to spend more time building up your revenue, even if you lose a little bit of ADR that you could otherwise maximize. But the risk is just too high. If we wait too long and this looks like this, we're going to be dropping these rates huge amounts. But really, there could be some stuff that's just related to this year. I have seen people booking around these big dates because I think the consumer themselves is just looking to save a little money. So let's go ahead and pull this up actually on the tape chart. So let's see, I've got this group here, and let's add the bedrooms. 3 and 4. And for right now, I'm just going to first zoom out so we can get a little bit more real estate. And I'm just going to kind of scan this. I mean, Looking at this, I know there's not really much we can do basically through May 17th. There might be some gaps here, which I'm not too concerned about. So I'm not going to focus too much on that. But I'm just kind of scanning. Like this one's kind of interesting here. There's like a full weekend available right here at the end of April. This is like a minor kind of like daily pricing thing we could do. Is just kind of make sure. So this is that same unit, I think. And if this same unit here is open for both of these weekends, it's not. Okay, so they're different units. I'm going to leave these for now. This one might need some adjustment just to kind of fill, but you know, at the end of the day, we are still selling on all these weekends, so we may not need to worry about it. We sold a little bit here. We'll be in the 2-week window in a week. It's a very expensive 4-bedroom. It's very highly occupied. It's just this gap. Let's go ahead and just drop these a little bit. I'm also going to drop this orphan. Okay, so let's see. Why is this? There we go. This screen's a little smaller than I'm used to. It's giving me a little bit of cutoff here. So we'll drop that just a little bit. Probably could go down a little bit more. I mean, that's going to be hard to sell, but we're so occupied that we really don't need to worry about it yet. We have a little bit of a gap here. Probably not a big deal. You know, if we go all the way to May 17th, it's nice to know that we do have some full weekends available. It means that we actually do stand to make a little bit more money. I'm not going to be too worried about those unless we get within the 2-week window, to be perfectly honest. Now, when is Memorial Day this year? That's a good question. So that's the 27th. So it's this weekend is Memorial Day. And if we look there, 28, 29, so 20, it's going to be this weekend. We're looking okay here, right? We're maybe not selling quite as high as we'd like. Rates are probably a little elevated. I'm not going to do much adjustment here because my guess here is 2 weeks. I'll be concerned in 2 weeks, right? That puts us about 4 or 5 weeks out, maybe 5 or 6 weeks out. That's really when we want to make sure that this isn't slowing. The big thing I'm looking for here is that this doesn't slow down over Memorial Day and we just keep making this little incremental sales. But if we pick up 8%, 7 or 8% over the next 2 or 3 weeks, we'll be in pretty good shape here. So don't really know that we need to make changes. We're actually picking up a little stronger in the next 2 weekends, so we might bump those up. One thing to notice here in this shape that we're just identifying is our weekday occupancy has actually been pretty good. And once we hit Memorial Day, it drops off quite a bit. So that's something that we want to think about, right? My guess is that our weekdays probably book in a much shorter time period anyway, so maybe we're not worried. But that's a shape that you want. When you're looking at these visualizations, there's certain things that you can read really quickly. The bookending was one. This one is just a big drop off in pattern. So the pattern here is that we're sitting up above 50% on weekdays. We're making sales. Once we hit this point, that pattern stops. We're now sitting at under 20%. There's no sales. So just finding things to look for like that tell you where to look on the calendar, tell you where you might have to make a decision. If we look at these rates, let's actually do this. I'm going to grab a listing here. One listing, and I just want to see a visualization of that rate plan. I just want to see how our weekday rates are actually going. So I'm going to select a whole bunch of dates here, and we have this option to kind of map this. So what I'm looking here is just, so I wanted to see if like our weekday rate position jumps up at all. And it doesn't really, like it's slowly crawling up. It's like at the end of May, it's 245 versus, well, that's 118. So that's quite a bit lower. And then in June, 290. We could probably stand to drop these weekday rate positions. That's a note I'm going to make. I might actually go in and adjust that somewhere else. I might go into the settings themselves and just drop the weekday rate positions. that's something I would want to test. Like, we do know that these rates are kind of going up. So we're in the 100 range here where we're selling quite a bit in the short term. We're out up at like the 200 and something range. And we're seeing this pattern where we're really not getting weekdays. We're actually pushing short stays. It might be that our weekdays are just too expensive. I would probably take from May, like just after Memorial Day through July, and maybe drop the weekday position 15% or so in some units, 20%, and see if we start seeing longer stays. We might also do that through the settings. This may be something that's just isn't a problem for us, honestly. It would be nice to get some longer stays. I think in the summer that might work really well, especially in these big properties. And it could just be that these are we're pricing too high and we just need to keep those weekdays low all the time. But again, that's something I would test. I want to set up a test where I can see if I'm actually giving up too much revenue by dropping this rate too early, and also just see if I change the actual booking behavior. Like, you might find that we make this big change and still we're not booking till the short term because there is just a short term window for these dates. And then we end up giving up more revenue because these continue to discount. We're already starting at a lower position. So that's something I'll bring up to the owner. I don't want to, I basically want to describe to the property owner what I'm planning to do here. I'll tell them what units I'm going to select and what I'm going to do. And then we'll institute that for maybe 2 weeks to 4 weeks and see if that changes our booking behavior at all. So let's go ahead and go back. So this is interesting too. These, let me look here. There's some pretty different. We're all negative a little bit. And we have some of these negatives, which we put on about 2 weeks ago. Okay, so what I'm going to do, actually, we're just going to do this now. So I'm looking at this. I'm pretty confident we can raise all of these weekends all the way out through probably August. I want to make sure that the owner themselves didn't do a bunch of random stuff here. So, okay. So this is what we're going to do. We have it kind of adjusted through July 4th. So I'm going to select a couple things here. Let's go from June. Maybe even, yeah, we'll do from June. June 1st, roughly, maybe May 30th. May, where are you, May 30th? Okay, here we are. Okay, so we'll go from May 31st. We're going to go from May 31st in this group. And we're going to go through, where did that end? June, roughly. 31st to June. May 31st through June. We're going to, I want to set these weekends back to, basically we're going to raise them 10%. They all had negative 10s on them, so I'm just going to set these back to 0. I'll set them back to 1, just so that looks like that. So we're doing this for this whole 3 and 4 bedroom group. It's a fairly large group. Okay. Now what I want to do is I'm actually going to set these weekdays to -25. Or we'll do 15. Well, -25, yeah, that's fine. I'm not going to include Sunday and Thursday because I don't want people to get a discount by shifting around their weekends right now. And what this should do is this should be a pretty significant drop here. Yeah, it's going to be like 15%. And I think right at the beginning of June, we're going to see that. Yeah, that's basically an additional 15%. So let's do that. And then we'll leave a note here so that we know what we're looking for. Okay, so very strong pickup across all summer weekends over the last 2 weeks. Removing the minus 10% in June. We'll also increase 10% on weekends in June, July, August. Weekday occupancy and pickup falls off about mid-May. Experimenting with dropping weekdays because we see a significant rate growth from the short term. April, early May, where we are selling, to the summer, where just weekends are selling. Applied minus 25%, which equates to approximately minus 15% adjustment. So we'll add this to the calendar, and I'll leave a reminder for tomorrow for our friend to take a look at that. Okay. And then let's see. Now we do want to apply this same kind of concept here. Now, if I were doing this more on a regular basis, I'm going to look through these because there may be some units we don't want to do this to. And those ones are, we'll do that at the end. So let's take this June period here. June, or July. We'll go through August. And this one's going to be pretty easy. Let's actually not include this 4th of July weekend because we want to come back and look at that. So let's start with the 8th and go through the 31st. This one doesn't have a lot of adjustments to it, so we're just going to put them in. This is going to be, we've got Monday, minus 15, minus 15, minus 15, 10, and 10, and I'm going to leave these where they are. And we'll save that. What do you know? Oh, darn it. Didn't select all the listings, that's my fault. But not difficult to do. So minus 15, minus 15, minus 15, 10, and 10. All right, these changes are almost saved. I'll add I'm not going to add another note here. They can just read it. Okay, so we've got that saved. And I think that's going to put us in a pretty good position for now. I don't really want to mess too much outside of this. We'll want to watch this pretty close. There's a few other dates here, so I mean, that's a lot of sales. This July, end of July period is looking a little extra strong. So I might actually bring this one up a little bit more. Let's set this to 15. That might be a little too much. We'll have to check that one next week. And then let's take a look at 4th of July. That 4th of July is looking really weak. and I don't want it to. So we're going to take this Thursday through Sunday, and I'm going to drop this. I'm actually going to, what's interesting is that rate-wise, this is already not looking that much higher than the other weeks. And it's very interesting that it's not selling. Like, we're not that much higher than the weeks around it, but people are avoiding this week. And that's an interesting kind of consumer behavior. I think that goes back to, we'll probably start to see the 4th of July sell as dates around it become more expensive because they have more demand. But I think early buyers have been looking for a better deal, so they haven't been choosing these areas that have significant rate adjustments to them. So I'm just going to do a minus 10% here. And we want to look for a response here because we might be able to bring this back up pretty quick. I think consumers have been looking around. Up until now, other dates around the 4th of July have been cheaper. People are booking those. Pricing systems and revenue managers are pushing the rates up on dates around it. Now that they're kind of equalizing, people will probably start booking these time periods too, which means we might be able to push this one back up. So I'm just saying it's the booking trends are poor and bookending. Rates are now lower than surrounding dates. So we will need to watch closely for opportunities to bring back up. We probably could have gone a little bit more than 10%, but I only look at this property occasionally. So since I'm only looking at it occasionally, this is a good trick, right? If I was looking at this property multiple times a week, I can make much bigger changes because I know I'm going to catch them. If I'm only looking at the portfolio occasionally, so you're a revenue manager who only has time to do it like once a week or maybe once a month, you really want to get in the habit of making smaller changes, but doing them much further out than you would. You really want to beat the window because you don't have time to react to big changes. And I think that's a trap that a lot of people get into. They don't have a lot of time for revenue management, and they end up getting really focused in like the short term. And if you're not looking at your revenue management very much, like the short term is too late, and the only thing you can do is big negative changes. If you only have limited time to look at revenue management, you really want to look outside of your peak window. And you want to make minor changes and try to change your pace so that you don't end up in a situation where the only thing you can do for as a revenue manager is drop the rate significantly for the next couple weeks. Okay, so the last thing I want to kind of discuss today, we just went through one spot in quite a bit of depth. Just I'm explaining to you guys what I'm looking at. As you do it and you practice looking for these different shapes, this would go much quicker because really we would just log in, know that this looks pretty good, maybe scan to see if there's some gaps to adjust. I would notice that there's this shift in trend here. Maybe look into that. I notice that I'm bookending here, and I also notice that my weekends are booking pretty strong. In reality, it's taken me 30 minutes to explain this, but you probably do this in 15 minutes, right? So half the time, maybe even a little less. Now, there's two other things that I want to do. I made two groups here, if I can read them. So I made a few reports, basically, just to pull up. This is going to be all of the different bedrooms, but I just want to look at listings that haven't sold anything or have sold very little in the last 14 days. So this is just a list of listings with low sales, right? And if I'm looking at these, I'm just going to scan this. This is the low sales thing is kind of this is kind of like a short-term pricing strategy. I'm just looking to make sure like, hey, they're low sales. Do I have big gaps open on the calendars? So if I'm looking at this, like the answer is no, right? Like there's not really anything to sell in the short term. So I probably don't have to worry too much here. Like these ones are all combo units, so they're blocked. These are all super booked. This gap is pretty big. So maybe this is a gap that we're going to bring down a little bit more. And because it's in the short term, I don't really care much about the ADR. I'm just going to like slam that down and see if I can get something in there. This would be more of a concern for me if there was a lot of white space. If there's a lot of white space, One, you really want to bring these down. We would probably scroll a little farther out and see if we can experiment with getting the booking window a little stronger further out. I may even open some of these listings and just review the rate plans themselves because it's like they aren't selling. We can also sort these. So like, you know, if they're not selling because they're high occupancy, then that's obviously a problem. These ones would be scary, except they don't have any available nights. So we're not really concerned here. There's another report that I like to pull up. This one is just low occupancy in the short term. So this one is just the lowest occupancy listings in the next 30 days. It's like less than half occupied, right? Not really any concerns here because there's just no availability. So, you know, I said this earlier, but you really, as a revenue manager, don't want to get caught in just managing your short window. So that short window might be like 0 to 7, 0 to 14, 0 to 30. If you're really large properties, might even be 0 to 60. It's where you can do the least. And what you can do is actually really easy. People spend a lot of time thinking about like, oh, how much am I going to drop the rate? Just slam it down and get stuff in so you can think about being better paced later. That gets reversed for a lot of folks. They spend a lot of time just thinking about this. The goal here is just find the listings that aren't selling, find the listings that are low occupancy, slam them down in the short term to just try to get heads in beds and not worry about it. And then if it seems to be a systemic problem, actually open up the listings and review the overall pricing strategy. Also check your distribution, make sure something's not broken. If you can spend less time managing the short term and more time managing the peak window and a little before the peak window, you actually start to avoid being in this situation, except for specific outlier listings, which you can now use the time to review in depth. So anyway, that's some daily pricing. Kegan will take us up on the next one. We'll probably start to look at some of the other markets. We know that Asheville and Lake Norman also have pretty good summer seasons. We feel like we've got this one in line. We might check the 2 bedrooms here. But I think we're going to be in pretty good shape other than just kind of trying to maximize our revenue on these weekends, probably until we get to the fall. So really all we're looking for here is, do we continue to sell? Can we push rates anymore? We want to make sure that this 4th of July sells. We want to make sure these don't stall out, and we're going to be in pretty good shape. Anyway, thank you. Bye.